Hello and welcome to today's MHN Snap session from Move In to Move Out, 3 risk management strategies to limit your exposure. I'm Paul Rasta. I'm an executive editor at MHN, and we are very happy to have you here today. Risk management is always a pivotal consideration for multifamily owners, operators, and managers as challenges in this area continue to evolve. Today, you're going to hear insights that will help inform your approach, whether you're creating a brand new strategy from scratch or looking for ideas on refining long-standing practices. You'll meet our special guest in just a moment, but first, let me go over a couple of quick housekeeping notes. We've set aside time at the end of the program for audience Q&A, so if you've got a question about risk management strategies, please use the Q&A function on your screen to send it in as early as possible. Now, if time runs out before we get to your question, or if you'd rather get in touch with us confidentially, our guests will be happy to follow up with you after the program. Also, we'll be emailing you a link to the recording of today's webinar so you can listen to it again and share it with your colleagues. Now, let me introduce our guest speaker. Ryan Lumsden is the president of multifamily at Assurant, a leading global business services company that supports, protects, and connects major consumer purchases. Ryan, it's great to have you with us. Thanks for making the time.
Yeah, thanks for having me today, Paul.
Absolutely. Well, we've got a lot to cover today, so let's dive right in. First, let's take a look at the big picture. What do you consider to be some of the most important perennial risk factors that multifamily owners and managers face year in and year out?
Yeah, I mean, there are a number of risks, but for today's discussion, there are 5, I'd probably like to highlight. And so, first, ensuring that both your assets as well as your residents' assets are protected. Maintaining occupancy is another key consideration. A third, minimizing bad debt, obviously a big component to ensuring profitability. Protecting your reputation as a property manager or owner, and ultimately then maintaining staff and resident satisfaction. So I think those are some of the big risk areas that I think, we'll probably get into today.
Sure. And are there any recent issues that may be particularly challenging because the industry has relatively less experience handling them? And certainly there have been a lot of changes in the world, as we've seen in the last couple of years. But how about some of these more recent issues? And do you feel that any of them may require more attention than they're getting right now?
Yeah, so obviously COVID's been very disruptive over the past couple of years, and the industry, I think, is continuing to deal with both the direct but also indirect impacts caused by the pandemic. So, if we think back to the beginning, it was more from a health and safety standpoint. How can PMCs continue to generate leads, lease their units to qualified candidates, all while staying safe and preventing the spread of COVID? I think, now it's really morphed over the past couple of years as, housing trends have shifted in general. And so there's entire segments of the population that have changed their housing plans and how they use and utilize their home. And so, for many people, the apartment used to just be where they slept at night and potentially hung out over the weekends. Now it's also functioning as perhaps their full-time office. And so tenants are spending a lot more time in their rentals. I think as we look at the overall market, the good news is the rental market is strong, and there's now over 44 million renting households in the US. I'd say, with rising interest rates, and Paul, we just saw this week, the Fed just raised the interest rates another 75 basis points and has signaled that they're going to continue to raise interest rates. And so, with rising interest rates, along with a shortage of housing supply, it's our expectation that the rental market will continue to grow and remain strong for the foreseeable future. We know one area, bad debt recovery is definitely a focus for many property managers and owners coming out of the pandemic. While collecting bad debt is critical to the bottom line, in talking to property managers, they're also very sensitive to the reputational risk associated with debt recovery, after the hardship that many of the renters experienced throughout the pandemic. And so I would say debt recovery with residents who face this, with these financial difficulties really needs to be done strategically and with empathy to stay compliant, but also to protect your reputation. And I'd say one other area that continues to evolve is we do see potential regulations around security deposits and deposit alternatives. Both at the state and local levels, we're seeing a real push to mandate that property managers offer alternatives to cash deposits, giving renters a choice. And I think for us, this is a welcome sign on both sides of the transaction, as deposit alternatives help PMCs find, attract, and keep qualified residents, but also for the tenants, it provides them with options and mitigates move-in costs. As we know, certainly rents have increased over the past year or so. And so we see this on the go forward probably becoming more of an industry norm.
Well, thank you. And certainly that challenge that's emerging between striking a balance of the reputation management and also just debt collection is certainly something that has come to the forefront over the last couple of years, hasn't it? Well, Ryan, let's take a step back. What are the best ways to get started with risk management? For example, how should operators and managers assess their communities for potential problem areas?
Yeah, I think for each different property manager and owner, there's really a bit of an art and science to this, and something our team here at Assurant has decades of experience dealing with and advising our clients in and offering solutions. And so I think it really starts with knowing the class of property as well as understanding your residents' needs and expectations. And that can definitely vary significantly by each property. From there, you can offer services that meet those resident expectations while also protecting them, but also, your assets, which I think is really important. So, for example, our surety bond deposit alternative, flex deposit, guarantees that the landlord full payment up to the bond amount while charging the resident a nominal one-time fee that's a fraction of the traditional deposit cost. And so you can attract and lease to qualified candidates, and your residents don't have that burden of the rising costs of moving into a new unit and thinking about a traditional cash security deposit. And so I think it's up to really each property thinking about those different risks and assessing their different properties. And some of the things we're talking about today, Paul, I do think are strategies that all property managers and owners should be thinking about, regardless of the property class that they're in today.
And again, there's a lot there that you're saying about striking a balance between some of these priorities. At this point, I'd just like to take a moment and again remind our audience that the Q&A portion of our program will be coming up in about 20 minutes or so. And if you do have a question for Ryan about any of these issues, I want to encourage you to submit it as early as possible. And you can just use the Q&A function on your screen. We'll get to as many questions as we can during the program. So Ryan, let's start drilling down into challenges more specifically and into strategies for dealing with those challenges. I want to hear more about how to address some of these potential problems in the resident life cycle, whether it's bad debt, property damage, liability, or other areas. And if possible, I'd love to take some of these issues one at a time and hear what your thoughts are on them. What kind of tools, for example, can help managers and owners reduce these risks?
Yeah, so I think we already talked a little bit about deposit alternative solutions to really help PMCs attract tenants and also, help landlords manage deposits. So that's one that we've already mentioned. But I would say, requiring renters insurance is really the next tool that should be in every property manager and property owner's toolkit. Over the past couple of years, more and more property managers have really moved to requiring renters insurance as they recognize the value of protecting their assets. And through this mandating of insurance, this has really helped grow the number of renters with renters insurance. However, we know it's estimated that still less than half of all renters have renters insurance. And so we still think that there's a significant opportunity as well as a significant exposure sitting out there with those that don't have renters insurance. If I think about renters insurance, it not only protects your assets as the property manager or owner, but if the renter's insurance also includes contents coverage, then it protects the residents and their belongings in the unfortunate event of something like a fire or theft, which we think is really important. There are liability only programs out there, and those will help protect the property owner, but these programs do leave your residents exposed. And so I know firsthand, it's not a fun experience when a resident goes to make a claim and finds out that they've been paying for what they thought was renter's insurance, just to find out that their personal belongings weren't covered. And so that's why we strongly recommend to our property managers and owners to offer a renter's insurance program that's more comprehensive, that includes both liability as well as contents protection. So we think that that's really important. I'd say in addition to that, just mandating renters insurance is the start, but the second part is really all about ensuring that they keep protection in place while they're continuing to rent. And so it's not good enough just to request proof of renter's insurance at the move-in. It's also important that your tenants keep that in place throughout their tenancy. So solutions like Assurance Cover 360 provides ongoing insurance tracking to ensure protection remains in place. And again, that's a seamless process that makes sure that someone continues to have that coverage, so they don't show proof of coverage, move in, and then cancel 2 months later. It's really important to make sure that that coverage stays in place. I think then as we move to move out, being able to collect, bad debt is obviously very critical. At Assurant, we have a recovery solution offering that offloads that burden away from the property manager to us and really helps take that burden. And so, if I think through, from security deposits to renters insurance, all the way through, recoveries, having solutions from move in to move out, I think is really the key to helping mitigate your risk.
So what I'm hearing here, Ryan, is that you're really advising a much more holistic approach to sort of these aspects of risk management throughout the cycle, rather than just kind of looking at them piecemeal, and adopting a strategy, adopting a program that's going to address those concerns from the moment the resident walks in the door to the moment that they move out of the community. And I have to say, by the way, it is rather sobering to hear that that statistics that you just mentioned about what was it, maybe roughly half of, or maybe more than half of residents do not have insurance, do not have renters insurance.
Yeah, and I'd say, Paul, I mean, the good news is that that number has increased significantly over probably the past 5 to 10 years. Historically, it was at even lower levels. And again, back to these risk mitigation practices that property managers have really started to migrate toward around ensuring and mandating, or at least requiring, that their tenants have this coverage to provide this protection. That has really helped to get us to that number. But again, that still leads us with over half of the renters still exposed without having coverage. Yeah.
So a lot of potential concerns out there, and certainly an area where managers and operators probably could use more attention, more ways to really make sure that they and their residents as well are covered in case something should happen. Well, of course, as we know, plenty of other kinds of risks often come up at multifamily communities. It's in addition to the ones that you have cited. So let's look at some others. Again, continue to consider the big picture. What are some effective steps to mitigate some other challenges, whether it be reputation management, which you've already cited, and of course comes up a lot today, or staff satisfaction, a big issue today, especially with the job market being as tight as it is, and occupancy, a perennial concern. Want to make sure that you've got your communities as fully occupied as possible. So how about any of those that you'd like to address?
Yeah, let me hit on a couple of those, Paul. And so maybe we start with staff satisfaction. I mean, we all know how critical quality leasing agents are to a property. And I think research shows that the average leasing agent only stays in their job for 1 to 2 years on average. And so, add in, as you mentioned, the current challenging job market, and, making sure that you're holding on to your good leasing agents and your staff is more important than ever. So I think, start by making sure that you're providing your staff with the right tools as well as support is really critical. And so it can increase staff satisfaction, but also ensure that they're effective in supporting the risk mitigation measures that we're talking about today. As a Fortune 500 company, Assurant, has a fully dedicated account management team that provides support to our property management partners. And we think that that's really important. In addition to that, having solutions that have robust integrations that plug directly into property management, the existing property management tools that help make the leasing agents, staff much easier, we think is important. And so ensuring that there are digital and automated processes in place are important. And again, talking about that support, making sure that there's, robust support in place to assist the leasing staff with different types of risk management programs. And so, we believe strongly that having the right tools and automating as much of the process is very important, as well as having that support and training to help that leasing agent staff as necessary. We've seen obviously that companies that take care of their employees receive great resident reviews and have a strong reputation in the market. And so, I think, staff satisfaction is really key today. And it's really important to make sure that you're providing that staff with the tools necessary and support so that they can continue to do their job well. Related to reputation management, we talked a little bit earlier about debt recovery, and certainly debt recovery is an important risk mitigation function, but it can also be a touchy one. And so, as we mentioned earlier, it's important to really leverage a solution with, strict compliance collection, processes in place, and also balance that with how do you show compassion toward former residents. And Assurant Recovery Solutions specializes in, some of the unique complexities associated with multifamily debt. We provide a variety of convenient payment methods, how we work with the different tenants around this. And we really try to work with the resident to help them find the best path to debt resolution and ultimately optimizing their credit as well. So I do think, reputational, management is key these days. No company wants to be in the newspaper in a negative light, or as we know with social media these days, it doesn't take much for those things to surface. So we do think debt recoveries is one that's obviously important to the bottom line, but it's also really critical to make sure that you do it in the right way.
So incidentally, Ryan, did I hear correctly that you're going to be doing a little bit of traveling soon? Are you attending NAA in San Diego, or is that, or you get to be one of the lucky ones that get to California?
No, thanks for bringing that up, Paul. We are going to have a pretty good contingency from Assurant, certainly out at NAA Apartmentalize here shortly out in San Diego. And I would say as part of that, certainly we'd be, for any of the attendees today during the webinar, we'd love to see you out there in San Diego, and would certainly be happy to talk more about a number of these practices, as well as solutions that are in the marketplace, and how you can think about what are the various risk mitigation tools to use as you think about your properties.
Sure, sounds great. So those of our audience who like to sit down with a member of the Assurant team and are lucky enough to be going to San Diego, you will certainly find it pretty easy to track down a member of the Assurant team and learn a little bit more about what's happening out there. Well, great. Well, Ryan, I really appreciate your insights on these topics and on-point observations about best practices. So I think it's time to start opening up our conversation and get to some questions from our audience. So here's the first one. There are a lot of private providers for these services. What should one look for in a provider in order to choose them as a partner?
Yeah, great question. And look, there are options. And one of the things I would say is definitely look at multiple providers and make sure that you're asking all the right questions to assess. I think each provider potentially, brings different lenses to their solution, but I'd really say ask the question, have they, how long have they been in this business and what experience do they have? I think it's fair to ask what other clients and what other property managers and owners that they work with. I would make sure that you really understand the ins and outs of their solutions. And so, we talked a little bit earlier about, for example, if you're deciding to go a renter's insurance path, is it a comprehensive renter's insurance product that includes liability coverage as well as contents coverage, or is it just a liability only? And making, determining what's best for your organization is what's important. But again, we strongly recommend and advocate for protection across both protection for the property, but also for the consumer. See what types of self-service tools and what types of digital tools that these options have in order to assist. And so, thinking about something like renters insurance, do they have self-service tools to support their renters that may need to go in and change a payment method or to change anything on their policy? Do they have support? Do they have support that can come out and help your teams and your leasing staff? So I think there's a number of factors, but I would always encourage people to really take a look and make sure they understand, is this company going to be there for them? Have they been in the business? Have they been there? Are they making investments in their program? And ultimately, you also want to make sure that you're going to work with a company that, and I go back to the reputational management, that is going to operate and provide solutions that are going to be compliant and make sure that your reputation is intact. So those are a couple of things that I would recommend, but certainly there are a number of options in the marketplace, and I would certainly recommend that you talk to a number of them, but really ask the questions and make sure you know what you're getting into.
Ryan, we have a couple of somewhat similar questions from our audience, and I'm going to put them together as kind of part one and part two for you. So here's part one, which is what differentiates Assurant from the rest of the other vendors that offer similar solutions? And specifically, how does Assurant differ when it comes to protecting the client reputation? And why do you think that you are more effective than other vendors? So if you'd like to just take them as a part one, what differentiates your shop in general, and how do you differ from the competition when it comes to protecting client reputation specifically?
Yeah, well, thank you for the question. And certainly I always like talking about Assurant. But on the first hand, look, from a differentiation perspective, I would say there's a number of things. One, I would say the expertise. We have been in the multifamily housing space for decades now, and we've got real expertise within our teams around understanding the space, as well as continuing to develop and innovate around solutions in this space. So we've been around. And that in itself doesn't make us a great solution, but we do think that the industry knowledge and the experience we there and understanding the needs of property managers, property owners, and renters is really important. Two, I would say, as being part of Assurant, our multifamily housing team is part of a broader Fortune 500 company. And why that's important is because it brings resources and insights from our other broader Assurant businesses, as well as capabilities that we can bring to bear for our partners. And so oftentimes as we go in and have discussions with our partners, we may start out with some of these exact risk mitigation strategies that we talked about today, but those discussions might evolve into us being able to help on a broader scale because of the broader capabilities that we have at Assurant. I would say the other thing to that is, because we're a Fortune 500 company, we have a really strong balance sheet. And from a solvency perspective, just a really strong, financially stable company that's been around for decades and decades. I think to that other point, one of the things where Assurant is key is not only are we providing distribution and product design, but we are also actually an insurance company. And so many of these cases, we're actually controlling our destiny. We're taking on the risk. It is our product. In the case of like renters insurance, we're putting that on our paper. And so we have a very vested interest. Instead of using someone else's product and just becoming a broker of that product, we're developing our own solution. We're taking the risk and we can control our own destiny. And so it's our choice whether we remain in this market or not. We're the ones providing the capacity, and we're very committed to this market. So I would say those are a couple of the key things. I'd say the other thing that you're always going to get with Assurant, and this is just part of our culture and part of our values, is that from a compliance perspective, we are always going to err on the side of compliance. And we are here to do that. We have much more at risk than one policy, one business. We have a whole enterprise, and our values are very clear about how we're going to operate as an enterprise. So whether you're thinking about security deposit alternatives, renters or insurance, or us specifically owning our own recoveries business, we are going to operate in a very compliant way. So that's maybe Just a couple items. I could probably go on for quite some time. I guess I will leave you with one last item, and I have this discussion all the time around there are any given year, there's new market entrants that have entered the space with, and more recently, a lot of them are tech startups with a technology focus. And certainly we welcome people continuing to push the industry. I would say, working with Assurant, I kind of view it as two things. One, you're getting a company that has been in this space a long time, has a proven track record, all the benefits that I talked about before, but we are also continuing to innovate very much like the new tech startups. And so our focus is on continuing to invest in the business, continuing to innovate. And if you look at our past history, we've been out in front on many new things in the industry around like our Cover 360 solution, whether that's, our paying with rent with our renters insurance, our digital tracking and other capabilities. And so I think with a company like Assurant, you can have the best of both worlds. You can get, the experience, the legacy, the financial strength and experience, along with a company that is focused on continuing to innovate.
Great. We have a quick question from an audience member who just wanted to make sure that they correctly heard the brand name of the product that tracks continued insurance status of the resident, and it's the one that includes 360. So I think I could probably almost remember it, but I will defer to you on that. Brian.
Yeah, so we have multiple renters insurance solutions, but Cover 360 is our comprehensive solution that includes our pay with rent, and so renters insurance paying with rent, as well as includes a tracking option, and so that we've got the processes in place, the portals in place to either seamlessly be able to send a link, offer renters insurance to your customers. They also have the option that if they want to provide their own insurance, they can easily upload that digitally, so they don't have to take up your leasing agent's time and handing in these documents. You're able to upload those documents digitally, and then we're able to track it. We also have what we call post-verification insurance, and that's an option as part of our Cover 360 offering that if you're mandating renters insurance and we're tracking and your renter does not provide proof of insurance, we will notify them, let them know that they need to provide notification. And if they don't, we can provide post-verification insurance on their behalf. And that's just providing them with the liability protection associated with your requirements potentially at your property, whether that's 100,000, 300,000 of liability coverage. And so comprehensively, all those together, we've packaged, and it's really a pretty seamless and digital experience for both the leasing agent as well as residents. So right. Certainly would encourage, if there's any questions on Cover 360, our team would love to talk more about it.
Terrific. Thank you, Ryan. Well, I think we have time to just fit in one or two more quick questions. And our next one from the audience is, what can a landlord do in-house to mitigate risk without hiring a service provider?
That's a great question. I think there's a number of things that each landlord's going to have to look at, and again, I think it will depend upon geography and what the risk makeup is of each of these. And so I think the strategies that we hit on today are still going to be really critical for you as a landlord or as a property owner to think about. The question is, if you feel like you can do some of these things on your own, we certainly know there are companies that maybe do their own debt recoveries or debt collection. We certainly know, you can look at other options as you think about cash security deposits, and maybe you want to just go on payment plans. That's one option that is thought about out there instead of an upfront all one security deposit. Maybe you can split that into a couple different payments. But when it comes to renters insurance, you certainly don't need the full gamut, but you can obviously still, without using a service provider, mandate that your tenants moving in have renters insurance. Now, whether you use a provider such as insurance to help make that seamless and easy for them to procure insurance or track it, that would be up to you. But I think the same things we're talking about today, those risks, stay for, any resident, any property. And I would suggest, think about those. And if you feel that there's ways to address those on your own, that's all right. But I would strongly recommend at least you have discussions with providers to understand, what's available and what might be the impediments of you not leveraging a provider, because I would definitely recommend at least having those discussions.
Well, we are just about out of time, so we're going to have to leave it there for today. But Ryan, let me just thank you, Ryan Lumsden of Assurant. Thank you for joining us, for taking your time and expertise. And let me also just thank everyone in our audience for joining us today, for your great questions. Really appreciate it. And again, we'll be sending you a recording, a link to the recording of this program as soon as it's available, so you can listen to it again and share it with your colleagues. So we'll leave it there for today, but thank you to everyone, and we hope you will join us again soon for another MHN Snap session, and have a great day.